stock market today analysis for Tuesday, December 27th, 2022. Before we get into analyzing various aspects of these financial markets, let me remind you that this video is being brought to you by ihavesuccess.com. ihavesuccess.com is here to help you begin your trading journey by learning to sell cash secured put options in a way that allows myself, that's me, to grow and improve in the process. Because if you want to master something, teach it. And I believe that in 2022, moving into 2023, if you have an internet connection, a bank account, and you spend money at least once a year, there is no legitimate reason why you should not be selling cash secured put options on stocks that you don't mind owning. If that's something that you'd be interested in learning how to do, then here's what I suggest. In the description of this video, there's a link to ihavesuccess.com. Go there, download any of these things, but definitely download this cash secured put stock selection guide. You can consider downloading 3 stocks that I sell cash secured put options on. These are not suitable for you, but what I'm going to help you do is figure out what is suitable for you. So that's the first step, is getting you could say a mental framework of how to select stocks, understand what different aspects of thinking about a business and what type of business is probably going to be around in 100 years versus which type of business might have some obsolescence risk to it. And then after that, there is a playlist in that same description of the same video below. It says something like trading options for beginners, with beginners in all caps. Watch that. It's got 5 videos on it. It'll help you set up some charts. It'll tell you, explain what the technical terms are. What exactly is selling a cash secured put option? How is it different than selling a naked put option? And then it'll talk about selling call options if you get assigned. Talk about the wheel strategy. And the last video will even show you how to use a screener at Yahoo Finance for free. So you can take the information you learned here and do some fundamental screens of stocks and find some stocks that are suitable for you. And then from there, you paper trade them. What is paper trading? Simulated trading. Go through that process before you start risking your real money, because ladies and gentlemen, you can lose your money. With that being said, let's get into looking at these markets. We are looking at the futures right now. A 1 month chart. So we got roughly 1 month of data. I think this one right there, that is November 28th. And today obviously is the 27th. So is that maybe, 1 month and 1 day? Whatever, close enough. It's about 1 month. Each candle representing 1 day. And we see the VIX futures dropping down a little bit. But wow, look at this, kind of this line in the sand, or should we say line on the charts right there. We see price went over there, came back down, came back over here, tested that area, went back down, tested this area again, boom, kind of like gapped up, and it's been above that 23. So when you're selling options, you might want to look for stuff like that. But there's a little more to it, but that is something to notice. Where are these places where prices seem to be getting support and resistance in a certain area? That's going on for the VIX. Now this is the ES. This is the futures of the S&P 500. We got a 200-day moving average that's sloping down, and we got a, look at that, looks like an M formation here, right? Now we got lows, lower lows, high, lower high, lower high. It's not the big picture though, right? Maybe you look at a weekly chart, maybe on a year time frame, something you look at a little more. But just a quick snapshot, we see prices they're not moving up. They just tested that 200-day moving average twice. And now look at this 390 area. We kind of see that same thing, right? Seems like potentially this area below, right in here, around the 390, maybe that is some support resistance area that now the price action's on the bottom side of. The Dow Jones future, What do we see here? We see a high. Woo, look at that. Look at that. Went up, without that, got that same thing right there too. Maybe it's a bit of an outlier. I don't know what's going on, but wow, it seems like around that 3450, right? 34,500, whatever that number is. You see it right in there. Same thing, right? Boom, boom, boom. Looks like we're gaining some support right around that 33,000 area above that 200-day moving average, but yeah, it came down here, kind of pivoted away from it. Yeah, look at this line in the sand right there, right? Ooh, look at that slowing of momentum right in there. See how I had this real wide body candle right here, drops back down, coming back up here. Ooh, not as much movement. Oh, that's a pretty good amount of movement, but right here it's getting close to that 433 area. Oh, it seems to be slowing down right in there. Maybe that's some support and resistance. NASDAQ futures, look at this, and drop down. This area right here broke that, falling down. Looks like right in here might be a little support resistance area also. Now we're on the bottom side of that. And then we got the Russell 2000 futures. Wow, that's a strong M to the downside, right? Seems to be building a little bit of base right in here. You can see this little range, like it's not dropping below there, but it's having a hard time. See where it clustered up here? Now that it's on the bottom side of that, seems like it's having a hard time getting to the upside. So overall, things looking overall bearish. How about that 10-year yield? Well, opposite of bearish, looking pretty bullish, right? Instead of a M, we got a W going on. And if it keeps closing above this 380, the interest rates, the dollar, things like that, there's a lot more political stuff going on than just straight price action. But pretending that this is just price action and none of those other macro, political, geoeconomic, whatever, all that stuff, we're just looking at straight price action. That's what we'd be seeing with this uptrending 200-day moving average. So it would make sense. You got this end of the W a little bit higher than this. It would make sense just on price action, not looking at what this asset is. Then we'd probably be seeing go higher. Oil below that 200-day moving average, and but look at this. It was really moving down, and now it started our month here. Look where it's at though. Look at that, higher. Right now, price action is higher than where it started in the last month, even though it went up and down. But it's not up to this point. So we'll see what's going to happen. Downward slope on that 200-day moving average. Natural gas, look at that. Fell down, rallied up to touch that 200-day moving average, and really fell down. So just seems to be down. And just for some general financial market trivia, what I learned from listening to the Macro Voices podcast with Eric Townsend is that natural gas is known as the widow maker. So if you want to make your significant other a widow, go ahead and start trading without knowing what you're doing in the natural gas futures. Gold, we got a downward sloping 200-day moving average, but look at this. These prices are really just, look at all that price overlap right in there. It's like, is it going up or is it going down? Well, you know what? It's going sideways. But as it's going sideways, look at this. Hope you can see that. Right? Look at this part. This part is going sideways, right? Somewhere right in here. There's like this range that it's basically going sideways. But this is pushing up higher. If this continues to happen, what will happen a lot of times with this type of price action, where you got a top and sort of this other part wedging up like this, a lot of times it'll push and break up to the top. Looks like that's what we have going on here with silver now too. Silver was in pretty good like a bull run here, but look at the prices really dropped down, then they went back up, so kind of hitting in this range of a top. I get it right here. Look, price is a little bit higher, but if it pulls back down here, it's like this range of a top, and with this price action moving up, so maybe we'll see some boom. The other thing about gold and silver, same thing. There's all these politics involved, so like I don't know what to say about it other than there's a lot of politics involved, and some people say there's no politics involved, and other people have all this the stuff. So, you know, make of it what you will. But your good buddy Brent, I'm not buying the BS. There's no politics involved. And you know, overall, you know, up since we're looking at, here's our first candle of looking at this quote unquote month. Up. This one, first candle, up. Bitcoin, downward sloping 200-day moving average. Granted, this is the futures of Bitcoin. Still doing what it normally does, what it's been doing for like almost a year now. Is kind of, it does this little fake rally up, and then it kind of goes sideways for a little while, and then it rallies up a little more, then it drops down, and it's kind of like in the sideways, slow drop down thing. Let's take a look at these general markets. Now, some of these boxes right here, gold, crude oil, Bitcoin, we're not going to go over those again, but the dollar, look at that. The dollar still, ooh, is it still staying in this kind of trend? It's been in this trend going down. I don't know. Right here, I don't know if it's technically, if it's still kind of, you know, in that trend. Maybe we would need a look at a 3-month or a 6-month chart to be able to draw that out better. But nonetheless, it's going down. It has been going down, and we see it close lower, but maybe it's going to build a little bit of sideways momentum. We'll see if it kind of starts crashing down, or not crashing, but going down, whatever. Slow crash, fast crash, drop, not crash, whatever terms, you know, like if I say something and it brings up some, you know, some emotion, then consider, you know, checking the emotion and, you know, put in whatever term that doesn't get your emotions going. TLT, 20-year treasuries. Look at this. You know, it rallied up, but it's came down. So right now, from this candle to this candle, down and hit the lowest point of the month today. Below that downward sloping 200-day moving average. We already talked about gold. VIX. Okay, VIX went up quite a bit today. It was all the way up here, but opened here, closed here. And pretty interesting that the VIX is generally known as the fear index. And generally when a stock market's going down, the VIX is going up. And then generally when the stock market's going up, the VIX is going down. It tends to be inversely correlated with the market. However, lately it has not been doing that exactly. But one thing that I'm waiting to do is I'm waiting to see if the VIX can drop down around 20, and I'm gonna put some trades on. I'm gonna put not some trades on. I'm gonna put there's one particular stock that I've been watching. And just a heads up, I am in a class called Hawaii Options Traders. I learned it from this class, but you don't have to live in Hawaii. We got a gentleman in there right now named Danny from Florida. So you can do it anywhere you want, but if you want to look at this class, look at go to meetup.com and look for Hawaii or Honolulu Options Traders, and maybe we can be in that class together someday. So this drops down. There's a particular stock I am going to be doing something with around. Wait, I want to see if it gets around this 20 area. SPX. Look at that. Boom. Tested 200-day moving average, which is sloping down, not as strongly as this one or this one, but it is sloping down. Test that 200-day moving average, test it again here, and drop down. Look at this kind of this line where it had support, broke that. Now seems like this area is being resistance to it. Some support here, some resistance here. Dow Jones. It looks similar, but the only thing is that instead of being under the 200-day moving average, which is sloping down, it's above the 200-day moving average, which is going sideways. So we got this part of the market putting pressure down. Here is the NASDAQ, downward sloping 200-day. Didn't even really get close when it tested it. See, test here, test here. We got that test here, but it's significantly away from that with price action moving down. Okay, another part of the market putting pressure, moving down. Russell 2000. Similar picture as this, right? Test that 200-day, test that 200-day, moving down, kind of consolidating, moving sideways here. This is the only one that's really not consolidating, moving sideways, but all three of these are. This putting pressure on this going down. So overall, you know, there's weight sideways to down is what I'm thinking. And unless the government If you say, well, Brent, it's not the government, it's the Federal Reserve, that's not part of the government. You know, maybe in under your definition, the Federal Reserve isn't the government, but I lump all those guys together. Those guys to me are all political hacks, and you can debate it till the cows come home, and I won't be in that debate. You'll be talking to the cows when they get there. I don't really give two about that. So if the government, quasi-government agencies decide to start doing stuff that they'll call some other name, they'll say it's not QE, but it'll give the same results as QE, then we'll see. I think we'll see the markets going up, but the markets are not going to go up on good fundamentals and earnings, and because everybody is highly employed and making good money, and we have all this manufacturing going on, So, anyways, you can feel free to debate that. I'm sure there's a lot of people on Twitter and YouTube that will like to debate it, and I will never find out the results of that debate because I just don't care. Let's look at these different aspects of different sectors of the market. We got 12 of them, and we're going to go through them kind of quickly. Same thing, 1-day candles, 1 month time frame. Technology sector, below that 200-day moving average, you see that slope, whoom, looks like the NASDAQ, right? Healthcare had been in a bull market. It has since broken that bull market, and it seems around this 135, which going back several videos ago, that 135 was the support, was the resistance. It broke through there, but now it is back under it, and it's basically acting as a resistance. So we see on this 1 month time frame, we got the support right in here at 134, and we got some strong resistance at 135, and which is going to be stronger. It's like roughly 135, right in that area, roughly 134, right in that area, which is going to be stronger. Is there going to be enough? Is there going to be enough power to blast through this, or is there not going to be enough power to blast through this, and it's going to crumble under here? Well, let's come back to that in a moment, and then when we come back to that, we'll count up how many sectors are below their 200-day moving average, and we'll look at sideways moving averages. Okay, so, but all right, uptrend 200-day moving average. XLF financials, downward trending 200-day moving average, below that 200-day moving average. Look at test here, couldn't make it. Test here, couldn't make it. Test here, couldn't make it. Seems like it's not making it above the 200-day moving average. Maybe it will tomorrow. You can hope, but hope is not a strategy, my friends. I would not trade on that. To me, I would be, if I was going to be trading this, I would be looking for a position to the downside. And XLI, industrials, look at that, sideways moving average, below that, but our price action from the beginning of this chart, bam, down, right, down here. It's not even on this time frame. Maybe if we look back 6 months, maybe we would see that it's sideways, but what we're seeing right here it was kind of going sideways, but it dropped down. Now it's kind of moving sideways, but it's sideways lower than where it was before. All right, so it just like took a step down. Basic materials, same thing, right? We had kind of sideways with the top here, bottom here. Now it's dropped. Look at this. Look at this, dropped way down here. If you exclude that, look where it's trending now, trending sideways, below this 200-day moving average, significantly below this right here. 1, 2, 3, can't get above that 200-day moving average, which is moving sideways. Now, if it stays below this, if it keeps riding this like this, it's a little bit sloping down, but, look at this. Telecom, communication, something like that. Hasn't even got close to that 200-day moving average. Oh, top tier, down here, same thing. Was going in this kind of sideways market here and dropped down. Now it's kind of sideways here, below that. Energy, above that 200-day moving average, which is sloping up. And energy sector, high, lower high. Oh, look at that. Boom. I'm not saying it's making a higher high, but here we go. Low, higher low. could be forming a W. It could potentially start going up. It wouldn't be shocking since this is a 200-day moving average just moving up. And let's see tomorrow if it remains to be closing above this kind of resistance area here. Because if it does, if it stays above this resistance area, it could be building a base and use that as support. And then potentially we could see it testing. Now, let's say it does. And I'm not saying that you should be trading this XLE, but let's forget about what ETF this is, and let's just focus on looking at what we see here and trying to figure out if A happens, then what should we do? Or, you know, if something happens, how would we potentially trade this? Well, here's a couple things. Now, again, like this is not, you got to understand, this is not financial advice. I'm not recommending you trade XLE. XLE is not suitable for you. I'm just talking about theoretical examples of this price action here. So one thing that we could potentially do, right, that at least I would look at doing, if I wanted to, I would look at some sort of premium down here for selling some sort of either put spreads or cash secured puts, naked puts, selling some sort of puts where I want income, and I'm basically, unless it's a cash secured put and I don't mind buying XLE, which personally I don't really buy these these ETFs, but you know, that's something I could do. Another thing I could do, which I would be less likely to do, is I could sell some sort of same type of call options up here out of the money. But to me, like I said, I would be less likely to do that because I think it has a chance of moving up. I think it has less of a chance of breaking below the 200-day moving average, you know, and I would select contract expiration point periods that are going to make it more likely for me to be right in that. So that's another thing. Another thing that I could do is that, let's say tomorrow I get a candle that looks like this to the upside. I could look at either buying shares of this particular asset, or maybe buying some sort of option strategy with this particular asset, and then look at closing that position at around maybe 90 bucks, because I see this like price kind of consolidation right in here, right? But on this side we don't see any of that. So if this shoots up here, and like today, if I would, in theory, if I would have got in today, I could potentially do that. I see that there's this upward, it's not a great kind of strong bullish candle to the upside, but maybe for some reason I think it's going to have more, or maybe I wait till tomorrow to see some kind of confirmation, and then I could consider taking profits here at 90 bucks, or I could consider taking profits here at 92. Now, if I had shares of stock on this, probably what I would do is I would unload some of those shares at 90, and maybe like let's say try to take, if my total amount that I purchased was, let's say, 100 bucks, which, look, this is a $90 stock. This, you know, I'm not saying you should be trading this. We're using theoretical example, right? So pretend these numbers are just whatever. You know, you gotta make this work for yourself. And again, XLE is not suitable for you. I'm not saying to do this on XLE. I'm saying, in theory, looking at this price action pattern. So maybe let's say you have $100 total. You bought a position, you buy to open, it costs $100, comes up here to 90, and let's say you're profitable by like 125 or something. I don't know, whatever it is, but it's over 100 bucks. So I close $100 worth of those shares. I still have shares left, but my original investment of $100 is now, that risk is now off the table in my pocket. And let's say it was like, let's say I got 25 shares left. And then I'm kind of like, you could say I'm quote unquote playing with the house's money, because my original investment is off the table. And then if it goes up to 92, I close out the rest of the position up there. Now there's more factors into it. You gotta look at more things, and you gotta make sure that things are gonna work out for you. But in theory, you know, looking at it just basically, so don't get your engineering hat out and start you know, going to town about how it won't work. Just look at the big picture and see what I'm trying to say. But again, me personally, man, I sell a lot of options. So me, I'd probably be selling something down here. I probably wouldn't be selling something up here because you know, at any time oil can shoot through the roof. Remember when was it last year? Some ship somehow got stuck in the Suez Canal. Remember that? Remember when oil refineries got bombed? You remember what happened to the price of oil? Boom! It's shooting up. So if I'm selling options, I'd rather sell them to the downside. But that's just me, man. That's not suitable for you. And okay, XLY, consumer discretionary. Look at this. Downward trending 200-day moving average, right? We see the same tops, right? Same tops, because the overall stock market kind of moves somewhat correlated together, but we're not even close to that 200-day moving average, and you see it moving down. So what's something else you could do here? Maybe you don't want to be selling options. Maybe you don't really want to be doing that. Maybe you're more of a value guy or girl, or whatever your proper pronoun is. Maybe you're more of a value human being. You want to be buying. You're going to take the Warren Buffett, Benjamin Graham approach. You want to be buying good companies with great earnings, are going to grow, all built-in moat, you know, brand and all that type of stuff, and you want to be buying them at a discount. Because I'll tell you what, that's probably how you buy your shoes. You probably don't, or your clothes, or whatever, you know, you probably know what you like, and when you see it on sale, you probably get it. So maybe you're looking to buy stocks on sale. So one thing you could do is you could open up like maybe Yahoo Finance, the free version. You could put in XLE. You could find that little tab that says holdings, and you could look at these consumer discretionary stocks that are in the XLY consumer discretionary sector, because the sector is taking a beating. The sector is on sale. That doesn't mean that you're going to find something that's suitable for you. It doesn't mean that it's the greatest thing, but I'll tell you, this is more on sale than this, right? It's fallen quite a bit. I can tell because it's 200-day moving average sloping down, and we're well below that. So that's something you could potentially do. Same thing over here. And then let's look at consumer staples. Consumer staples, look at that, sideways, drop down. Ooh, kind of, look at that. You know, I see, you know, maybe it's sideways in this bigger range. Up here to somewhere about the high 70s to basically right down around that 200-day moving average. You know, possibly. I really see a little sideways action here, but here, you know, pivot. I don't know. Let's see what happens. It looks like it's gonna. Let's see what happens around this $76 area, and then utilities. Now utilities, that one definitely. Like, look at this. It's like, yeah, maybe it's sideways right in here. It came over this 200-day moving average, but it's like a breakout point and failure right here. Now it seems to be testing this 200-day moving average. What's going to happen? It's sideways 200-day moving average. So if it breaks out above the 200-day moving average, I would think sooner or later it's going to come down below. And that's what the big trend has kind of been telling us, sideways. What the full range is, I'm not sure, because we're only looking at 1 month of data. Real estate, look at that. Downward sloping 200-day moving average, below it. Again, look at that. Going sideways, though, right here. So we got this, made the sound. Whoop, whoop, bam. Drop down here, and we're kind of stuck in this range. It's going to happen. Let's see if it's going to break out of this 37.05-ish type of range, $37 area. Or is it going to come back and test this 36 and go to the downside? It would really need a good amount of energy to push up here into the 38 and go forward. And look at this. Look what this is telling us. Have you heard any good stuff about real estate lately? So we'll see. Retail, same thing. Drop down. A little bit of sideways action right here. So this one, right? We wanted to look at this one for some reason. I can't even remember why. But nonetheless, I remember we're supposed to look at it. So downward sloping 200-day, right? There's 12, we're looking at 12 sectors here. We got 1, 2, 3, 4, 5, 6. Half of these sectors are below a downward sloping 200-day moving average. 50% of the sectors of the stock market are below the 200-day moving average, a downward sloping 200-day moving average. What does that tell us? That tells us 50% of the stock market is likely still to be in a downward trend. At this moment, 50% of the stock market is still in a downward trend. Now let's look at sideways, above or below. Okay, sideways. Sideways, above. Sideways, below. Sideways, above. Sideways, below. So 4 sectors, 4 out of 12, the 200-day moving average is moving sideways. In half of those 4, half is below, above, half is below. which would kind of make sense, right? It's sideways. We would expect it to go above, go below, go above, go below. So it's not half, right? It's not half the market. Half the market is putting pressure down. What is this? I'm not good at my mental math. But 4 out of 12 are moving sideways. Now, how many are moving up? 1, 2, 2 sectors out of 12 moving up. So what do we think, ladies and gentlemen? What do we think? When we look at it that way, what do we think would be the most likely scenario for the market? Right now we're looking at the S&P 500 and we're just kind of using it as a proxy for the overall market. There's only 3 ways the market can go. It can go up, it can go down, and it can go sideways. 6 out of 12 sectors, 50% of the sectors of the stock market are moving down below their downward sloping 200-day moving average. 4 out of 12 sectors of the stock market have moving averages that are currently moving sideways. Of those 4, 2 sectors are above the 200-day moving average, 2 sectors are below. Of 12 sectors of the stock market, there's only 2 that are above the 200-day moving average with it moving up. So the least likely scenario is for it to move up, unless the government and those quasi-government agencies, unless they start doing something, just like they did here, and rigging it to the upside. You don't like the word rigging? Put some other word in there. I don't care what word you want to use, because the result is the same. They put some program in place and it went up. So use whatever term you want. Potentially, just by looking at statistics and in math of 12 sectors, we would say the most likely thing to happen is falling down. Can you continue to go on the downside? But there's something that that lingers in my mind. Right here. Plunge protection team. The plunge team. AKA Working Group on Financial Markets, created in 1988 by President Ronald Reagan. So it's still in motion, and it's to basically provide financial and economic recommendations to the U.S. president during turbulent times. It's a group headed by the Treasury, the Chair Board of Governors of the Federal Reserve, Chair Securities, and Chair of the SEC, Chair of the Commodities Futures Trading Commission. right? You can read all about it if you want, but to me, like, I can't prove this in a court of law, but here's the beauty. Your good buddy Brent doesn't need to prove jack crap in the court of law. I'll need to make money. So for me, I think even though when we're looking at 6 out of 12 sectors of the market moving down, I think that plunge protection team could be at play here. And what I'm seeing right now, look at this little double bottom right there. Look at okay, so yes, here's like these wiggly lines here, but overall, look at that strong movement up. Now here we have movement down, but it's not tight like this, right? It goes down and it's in this channel, right? We see kind of, and right now we broke out above that channel, and this line, if that trend line wasn't there, you see it's kind of falling into that. But I wouldn't be surprised if, even though we only have 4 out of 12 sectors moving sideways, I wouldn't be surprised if we end up having more and more sectors moving sideways. And the way that I'm looking at it personally is months ago, weeks ago, I was watching to see around here, I was watching to see, is it going to test this top part of the channel? Especially right here. It pulled back. I saw it was pulling back. It had pulled back here before, and then it went up. So I was watching to see, is it going to test the top part? Yes, it did. It broke out. And then it's coming back down to test this part. As of this moment, it's sort of moving with it. But look at this. If you look at from this price day here, get it? Look at, not get it, but understand it's not an actual, number to the penny. It's more of a range in there. Give yourself like $1.50 wiggle room or something. But you see, and we go look back to the left. Look at right here. Look at it. Prices came up to this point, pulled back. Then shortly after that, tested this again, pulled back further to right in here. And what is that? Where did it pull back to? Right in there. Okay, about the 3, somewhere in the range of high 360s, low 370s. Right in here, still high 360s, 366. Right up here is about 370, right? And then up there, up in here, it's in this range of about somewhere around the 380s. So we're kind of testing around this 380 area. I wouldn't be surprised if we saw it do something like this again and bounce back up. How high could it bounce back up? Well, we could look at tighter ranges. We see this tighter range kind of right in this area. So maybe we could say we got like this tighter area from about somewhere 380-ish to about 400-ish, right? Like $20 move right in there. And we could extend it out a little more. Maybe we're going somewhere around all the way up here to like 430-ish, 420-ish, somewhere in there, all the way down here to about 357, the kind of the high 350s, mid to high 350s. And that would make sense. Look at here, right? See, prices tested right here, turned around, came back. And then tested here again, turned around, came back. This time, boom, came through. Tested here again, but that's like further down our range. So overall, I'm looking to see what it's going to do around the 380. If it keeps, because right now it's closer obviously to 380, the low 380s to the high 370s versus 390s to 400. It's on this end of the range. So I'm waiting to see. Yeah, I guess I'm not like, when I say waiting, I'm still taking action. I'm not waiting to take action, because I can make money in a variety of directions. You could too if you took the time to learn how to do it. That's why I love the stock market, because you can sell options, you can buy stock, you can short stock, you can do a variety of things. You can buy options. There's so much you can do. You just got to figure out, have an idea of which direction the stock is moving, and apply an appropriate strategy that fits your risk profile, fits your portfolio, all this type of stuff. And what I would like to see you do is learn enough to be able to make wise, suitable decisions for yourself, so you do not have to rely on the suspect opinion of other people. Other people including me, other people including anyone that I've never met before. Whatever, like you're an independent person. What I want for you is for you to be able to make wise decisions for yourself. Because, you know, there's one person that really cares about your money. There's one person. And you look that person in the mirror every single day. I heard Andy Tanner talk about there's certain skills that are worth outsourcing, and there's certain skills to learn for yourself. And like he said, you know, like mowing his grass, maybe that's something he would outsource. Doing a root canal, maybe that's something he would outsource. But brushing his teeth, that's not something that he outsources. And he was saying managing money, being proactive with your money, he feels falls in the category of you learn how to do it yourself. And I personally agree. That's why I've been learning how to do it myself. And I love it because it's a never-ending journey. Right? There was a movie called The Never-Ending Story. I never watched it, but I got the never-ending story unfolding in front of me with these financial markets. And you might not want to be all, you know, you might not want to wake up in the morning thinking about risk graphs. Maybe you got other things to think about. That's why I think you should at least look at and learn what is the value of selling cash secured put options on stocks that you don't mind owning, because you can be active in the market and you can wake up in the morning and you can think about something else. But if you want to master the stock markets, that's a strategy that you should know anyways. So with that, my friends, I hope you guys have a fantastic day. In the first quarter of next year, I should be releasing something. You might be interested, you might not. And it's sort of irrelevant because you know who's interested? Your good buddy, Brent. I'm interested. I'm working on it. That's what I'm doing. I hope you guys are doing something great for yourselves. Have a fantastic day, and I will talk to you later. Aloha.